I wanted to become involved in the natural resource business, really from my mid-teens. I became a bouncer in bars in Vancouver, and that resulted in me becoming a bar owner in Vancouver. Mercifully for me, that bar was the epicenter of the emerging Vancouver Stock Exchange. The cure for high prices is the cure for high prices. I learned simultaneously that the cure for low prices were low prices. And the resource business went from being stupidly in favor, with commodities in the long term overpriced, to being stupidly underpriced. I think there's a huge opportunity now for younger people to involve themselves in the space.
My name is Eric Mashinsky. I'm the editor of the Gold Investment Letter, and sitting in here to bring on a legend in the resource space named Rick Rule. And the reason I wanted to get Rick on is because his background in the space is very, very, very thorough and unique. And the more that I have heard about his background and his story, the more intrigued that I've become. He's as active as ever in the space, even though he essentially said he was retired. He's a failed retiree, as he put it. And the amount of knowledge and wisdom that we can gather from somebody like Rick Rule is very, very important if folks like me and others that are speculating or investing in the natural resources or junior mining space want to have the type of winners that can change our life. And Rick has had numerous ones that have gone up, hundreds of fold, many 10, 20, 50 baggers in his career. And so I'm very excited to welcome Rick Rule to Real Vision. Hello, everybody. This is Eric Mashinsky, guest appearance here, an interview with one of the noteworthy legends in the resource space and the investing space and the financial services arena. Just as a note, everything that we're talking about today is for educational and information purposes only. Please do not take this as personal financial advice. Rick Rule, how are you today?
Eric, I'm doing very well. The better to be on Real Vision talking with you. Thank you.
Awesome. Well, we had a chat last week, which was very pleasurable, getting to know some new things about you. And today, I just wanted to dig a little bit back into your story. There's a very big generalist investor base that watches Real Vision. So just about everybody knows you in the resources and mining area. But in terms of the generalists, maybe tell us a little bit about where did you come from? How did you start in this business? And how did you come into it? And where was your rise from? What part of the business?
Well, if you take me way back, I'm 70 years of age. Part of my family was engaged in agriculture and a different part in oil and gas. So you could say that part of the resource business was in my blood. I emigrated from the U.S. to Canada, I believe it was in 1970, to attend the University of British Columbia, which at that point in time had a degree program in natural resource finance. Partially to put my way through school, I became involved in an odd part of the hospitality industry. That's a charitable description for what I did. I became a bouncer in bars in Vancouver. And that resulted in a long story, but it resulted in me becoming a bar owner in Vancouver. Mercifully for me, that bar was the epicenter of the emerging Vancouver Stock Exchange. And so I got to learn the resource business both from a finance point of view in university, but much more importantly, I would suggest where the rubber met the road, where the deals were being done, the sort of seamy underside of the Vancouver Stock Exchange. I've had the very good fortune in the ensuing 50 years to get to know resource finance all the way from the construction of private companies through what I laughingly call the penny dreadfuls, the small exploration companies, all the way up through helping world-class entrepreneurs. The Lundin family, Robert Friedland, Robert de Crepigny, all of them build and sell very large natural resource companies. Concurrently with that, because I was involved in financial services around natural resources, I came to know the conventional financial services businesses, the wealth management businesses, building brokerage firms, the asset management businesses, helping build syndicators and money managers, and of course, conventional banks, where I've now been part of 7. I had the very good fortune to join Eric Sprott when Sprott Inc. bought my business in 2011 and helped build Sprott Inc. from a fairly small base to now a company which manages $25 billion US in natural resources and precious metals on behalf of 275,000 investors, and separately help a team that built one of the first internet banks in the United States, EverBank, from inception through a trade sale in 2014, which is to say from 0 assets under management to $28 billion under management when we sold it. I'm now involved, having failed retirement, which I'm delighted to have failed at, in building a new internet bank in the United States called Battle Bank.
Let's get a little bit more granular on your background. I'm sure there's some very cool stories from the bouncer days, but that bar, that place you were bouncing, you ended up eventually buying that place.
That's correct. I ended up owning that bar and other hospitality venues. The bar was sort of legendary in Vancouver, and the architects, if you will, the real originators of the Vancouver Stock Exchange, were very frequent patrons in that bar. And as a young man, a very earnest young man, my habit was, frankly, to pour these guys alcohol, listening very carefully to what they said, ask them questions, excuse myself under the pretense that I had some work to do, run in the back and write down the answers in a spiral notebook. As funny as it might seem, that was a wonderful way for a young guy to really understand the construction of companies, the construction of the promotional stratagems, to listen, as an example, to the man who I consider to be the architect of the Vancouver Stock Exchange, who was Peter Brown, question some of the early legends in natural resource finance, men like Murray Pezim or Adolph Lundin. I had the extraordinary good fortune of being present and listening carefully as the informal part of due diligence and the informal part of strategizing was taking place, which was, I now realize, an absolutely invaluable education for me.
So you're at university, you're studying resource finance, and to get some cash flow, you go get a nighttime job at an establishment where you started as a bouncer. Did you know it was a resource mecca land and go there because of that, or was the Lord just smiling down on you and you got very lucky?
I got very, very lucky. I did know that the University of British Columbia had the only natural resource finance program on the North American continent. I knew that much. And I wanted to become involved in the natural resource business really from my mid-teens. So that part of it was absolutely deliberate. The connection between my getting a job as a bouncer and running and then owning a bar that was at the epicenter of the natural resource business was entirely fortuitous. There was no strategy on my part.
So do you have any memories from the early days back, whether it was with the bouncing or just in the venue when you owned it, like any particular, sort of, I guess, divine appointments you might have had with anybody in particular, whether it's Peter Brown or anybody else who was coming in there? Does any memory strike your fancy that was like, this is very valuable?
Certainly having the extraordinary good fortune to just spend time with Peter Brown. Maybe more importantly, my earliest mentor in finance was a deep value investor by the name of Peter Kundal, still the most important mentor that I have ever had. My goal as a young man, this will tell you what a boring young man I was was to become an international tax lawyer around natural resources. And there were a couple of high-profile lawyers around there, too, one of whom I interviewed with a view towards getting career guidance. And that gentleman said to me, if you got through law school, I'd hire you, but I think you'd be miserable as a lawyer. I think because you're a successful businessman, that you should become an investor. And although you don't know it, him talking to me, the best investor in Vancouver is a man named Peter Cundall, and he already knows you and likes you. I think that you should visit with him. So I did talk to Peter Cundall, just really to humor this lawyer. And Peter Cundall gave me a copy at age 20, if my memory serves me well, of Ben Graham's wonderful book, The Intelligent Investor. He said, read the book, let's talk next week. And I read the book just out of a sense of obligation. And once I started reading it, I couldn't put it down. That weekend, visiting Peter Cundall literally changed my life. I went and talked to Mr. Cundall and said, I have no background in what you do, but I'd like to go to work for you, and I'll go to work for you for free. And in addition to that, in my bar, to the best of my ability, I'll try to find you some investors, some clients for free. He told me that was a very good price, maybe more than I was worth, but he signed me on. I would say the other real advantages that occurred to me was that I became introduced to one of the best geologist businessmen that I've ever met in my life, a man named Hugh Mogensen, who then introduced me to Seymour Schulich, the author of Franco-Nevada, and Ned Goodman, probably the best multi-company resource investor in Canadian history. Through Peter Brown at Canaccord, I came to be introduced to a couple people who went on to become real legends. One was Murray Pezim, who, for those people who have long memories, was the first Uber promoter in Canadian history. And the second was Adolph Lundin, the scion of the Lundin clan, who are now, I would suggest, the first family of natural resource finance. I had the good fortune to do my first transaction with Adolph Lundin in 1974, when I was at the ripe old age of 21. And that relationship with the Lundin family has served me, and I dare say them, well, for 45 years, to the extent that I'm now doing business with the third generation of Lundins, having done a lot of work with Adolph, a lot of work with his sons, Lucas and Ian. I'm now in the process of doing business with his grandsons, which is, for many reasons, both financial and personal, a blessing to me.
So in your first job with Peter Cundall, what was your role, and he was a value investor, but what was his business? Was he an investment bank, broker-dealer, or a fund manager, or?
Peter was a fund manager. He took over, as I recall, a $17 million AUM publicly listed closed-end fund. So he was absolutely a fund manager. And I would suggest that my first job was gopher, which is to say I did what he asked, with the view that he would teach me securities analysis, which he did from the ground up. Peter was very much an adherent to Ben Graham. So he was looking for companies that were either what we then called net nets, companies that were with the market capitalization at a discount to net current assets, that were simultaneously cash flow positive. Those were very different markets then. Things were cheaper. Peter referred to those as free bonds, people where there was more cash on the balance sheet than there was either market capitalization or debt, that were cash flow positive. His point was then that you got the yield for free. Or companies with very large, misunderstood, redundant assets on the balance sheet that were not important to the core business, but that you got at a deep discount or for free. So as an example, we were early investors in semi-public but mostly private timber companies in Atlantic Canada or in the northeast of the United States, companies that were valued based on their free cash flow, which were low, where the market paid no attention to the real estate values in the company, either oceanfront or riverfront. He became attracted to and introduced me to very small U.S.-based breweries where the free cash flow from the brewing business is what the alleged selling point was, where the earnings growth was slow or negative, but companies that were setting on extraordinary real estate values around their breweries. Peter's thesis being that you could have the beer brewed by somebody else and sell off the real estate. That turned out to be a spectacular business strategy. Peter was also in the belief in the early part of the decade of the 70s, he taught me contrarian investing, that given the fact that capital markets had underinvested in natural resources all the way since the Depression, that resources were coming off a 30-year bear market and nobody cared. He was an early gold bug because he watched what governments were doing in terms of debasing the currency. And he believed in 1970, 1971, 1972, that asset classes like base metals, like precious metals, and in particular oil and gas, were stupidly underpriced, mercifully for me.
Well, that's pretty darn good timing. Now the question is, did everybody get very liquid in the late 70s and into 80 with the bubble, or ride it for the next 2 decades through the ups and downs? That's the tough part, right?
Well, Eric, there's good news and bad news there. Peter was a mature adult, and towards the end of the decade of the 70s, he came to believe that resources were not cheap. And he looked for other asset classes. His acolyte, myself, viewed things differently. I started to believe the propaganda that was coming out of the financial services industry, starting to believe the morons at the Club of Rome, and I confused the success I had through the decade of the 70s with brains. I thought that I was a genius when, in fact, the gold price went from $35 to $850. The natural gas price went from 15 cents to deep deregulated natural gas at $15. I made the young man's mistake of confusing a bull market with brains. So I, in fact, went over the waterfall. I went from being a very wealthy young man in 1979 to having a net worth that was sub-zero in 1982 as a consequence of bank leverage. I ignored the fact that in capital-intensive cyclical industries, one must either be a contrarian, which is to say buy when they're out of favor and sell when they're in favor, or you will be a victim, which is precisely what I did. I did it to myself with no help from Peter. That lesson, however, Eric, was extremely valuable. By 1983, I understood the error of my ways, and I was, as a consequence of the analytical tools that I had learned through the decade of the 70s and my newfound humility, able to rebuild my skill set, my self-esteem, and my net worth, so that by 1987, particularly after the crash in 1987, I was basically, both financially and temperamentally, set for life.
Do you remember the first stock you bought and what age you were?
The first stock I bought would have been when I was 18 years of age. I have no memory of what it was. The first company that I was involved in a peripheral way in helping build as a consequence of my connection to Adolf Lundin was a company called Glamis Gold. That went on to be a very successful company. It became part of the Goldcorp Group and is now part of something called Newmont. I had either good or bad fortune, depending on your viewpoint, in being introduced by Adolf Lundin both to North Air Mines, which went from zero to being a dividend payer, and Glamis Gold. And I remember thinking at the age of 22, boy, the mining business is simple. I have to do more of this. I knew something about oil and gas, but given that my first two involvements, if you will, were successes, I came to believe that mining was an easy business and I was good at it. Something that time disabused me of.
You talk about the 1982, humility in your personal case. And then, the decision that you either figure this out and do what others are not, or you can become a victim. There are a lot of victims that I hear today in this environment. And so at that time, I'm assuming you were probably around 30 years of age or something like that, early 30s. And, you had to build yourself back up from -0. What gave you the idea, or was it just the fact that you had such good success, you knew you could get it back and it was a cyclical business? What gave you the idea to dig in and keep going? And how did you end up getting over the hump after 1982? Do you remember if there was a particular investment or market that carried you out or helped?
Two things happened, maybe three. The first is that I'd acquired a lot of knowledge. And when I came to understand that the cure for high prices is the cure for high prices, I learned simultaneously that the cure for low prices were low prices. And the resource business went from being stupidly in favor, with commodities in the long term overpriced, to being stupidly underpriced. And while I hadn't been able to understand the upside, I was able to understand the downside. And so I determined that the idea that I would check out at the bottom wasn't something I was going to do. And by the way, I had to do something. I had a fairly substantial negative net worth, and I had absolutely no interest in stiffing the people who had lent me money or were my investors. I was unwilling to declare bankruptcy, and so I had to work my way out of it. I had the good fortune, and in fact, I credit myself for some of that in terms of integrity, to assemble the people who I owed the most, one way or another to. There was a group of 5 of them. And I had a conference call, and I said, here's where we are. Here's what I propose to do. I propose to pay you back every dime, principal and interest. But you're going to have to stick with me. You're going to have to be patient. That had 2 consequences. Well, maybe one consequence. 5 people who were important in the natural resource business as investors and financiers were impressed with the fact that I didn't walk and began to introduce me to opportunity. And when I went into the brokerage business, which is a different story, later in the decade of the 80s, a couple of them became my biggest clients. And because they were, first of all, extraordinarily wealthy and extraordinarily experienced, in addition to the fact that they were very good clients, they were very good sources of intelligence and very good sources of new clients. Now, partially, I credit my own hard work and integrity for being able to start my business. Through the early part of the decade of the 70s, 80s, through my own close brush with bankruptcy, and also because in addition to being a debtor, I was a creditor, I came to learn a lot about the bankruptcy process. And one of the ways that I was able to dig myself out of my financial problems was to go to work in the reorganization business, in the bankruptcy business. Through the early and mid part of the decade of the 80s, I was involved in doing an awful lot of restructuring and bankruptcy in U.S. bankruptcy courts. Simultaneously to doing that, I became securities licensed, and I began to become what is called in U.S. parlance now a wholesaler. I was somebody who would take investment opportunities through the broker-dealer business in North America and explain the opportunity to brokers, or if the brokers wanted, explain the opportunity in seminars to their clients. And so I became a wholesale broker. I found myself in the 1980s liking the broker's clients more than I liked the brokers.
Yes.
And I determined for myself that what I would actually like to do was work with clients. And I was looking for an opportunity to do that. When the crash of 1987 happened, I had the sense that most of the brokers that I knew were too cowardly to call their clients when the stocks were down by 50%. So I took it upon myself to establish myself as a retail broker, figuring that I would call these clients and that they would appreciate the fact that somebody was willing to do that. Concurrent with doing that, I began to have some discussions with a great early natural resource storyteller named Doug Casey, who had written a couple best-selling books and had 60,000 subscribers. And when I talked through to Doug Casey with what my plan was in terms of becoming a customer-oriented retail stockbroker, Doug Casey loved the idea and introduced me to 60,000 of his readers with the not-so-subtle message, do your personal balance sheet a favor and open an account with Rick Rule. Literally, from December 1987 to December 1988, which is to say over 12 months, I took a retail book from having 10 or 12, admittedly very, very good customers at the beginning of the exercise, to having something like 500 customers, which is to say I added more than one client a day for 12 months. And my career was made.
That's not easy. That's not easy to do. And you didn't even have to smile and dial your way to 500. That's fantastic. They were calling you.
That's correct.
So that's awesome. The restructuring and the bankruptcy process that you were in the 80s, did that scratch your itch as your potential legal ambitions were in the background?
Not at all. I observed bankruptcy and I saw how inefficient the process was, particularly in the United States. The Canadian bankruptcy is a much better system, much more straightforward. You have a receiver who takes over the asset and he or she administers and then liquidates the asset for the benefit of creditors as they have been established by pre-filing contract. In the United States, the process is called Chapter 11, reorganization. It's very different. Generally, the management team that managed the company into bankruptcy continues to manage it. And the judge, at his or her discretion, awards pieces of the estate to various claimants based on what the judge believes is in the best interest of all, without too much regard for existing contractual relationships. What happens in that process is it becomes highly legal and highly political, and too many of the assets of the estate get used up in the process. So what I came to understand is that the resolution of bankruptcy, if it's efficient, is really a sales process. I would go to the secured creditor and I would say, you think you're secured, but there's going to be so many fights among so many claimants that the estate is going to be greatly diminished. And by the way, this local judge in West Texas is going to put the unsecured trade creditors in West Texas who vote for him ahead of you, irrespective of what the existing contract says. And by the way, the managers are going to keep this going as long as they can so that they can salary away your security. And then I would go to the unsecured creditors and I would say, don't you guys understand? This guy over here is senior secured. He gets secured first. And by the way, there's 40 of you. And every time you meet with a lawyer, the estate, as a consequence of that day, gets reduced by $40,000 in legal fees. And then I'd go to the management team and I'd say, you guys are screwed. You'll be lucky if the unsecured creditors don't sue you. So I'd go to each claimant, and my first action was to just beat the hell out of them. Beat the hell out of them to lower their expectations. The idea being that if I could beat them into a position where they were equally unhappy but willing to settle before the process used up the estate, that everybody would get something. And so I employed the carrot and the stick. If you work against me and frustrate me, I will do my very best to see that you get nothing, or at least less than you're due. If you work with me, I will defend your interest, and we will try to keep the entire estate from being gobbled up by the legal process. And that ended up working very well. In the course of doing that, I came to be known and, I dare say, admired by a whole group of investors who went through these bankruptcies with me and got something as opposed to nothing. I also learned intimately how the capital stack worked. In the oil and gas business, what volumetric production payments were. Those are now called streams for people who don't know what volumetric production payments are. I learned the mineral or royalty business well. I learned the subordinated debt business, the junk debt business. I learned the senior secured business. I learned where equity and preferred equity are and should be in the capital stack. So the whole process of doing this bankruptcy business taught me natural resource finance in a way that they wouldn't consider teaching you in business school. And I learned the interplay between personal connections, between communication and relationship, and finance. In other words, in addition to learning how these various instruments worked, I learned how to analyze them in the capital stack, and also how to explain them and, frankly, sell them to all participants. It was an invaluable lesson.
So that is fascinating because it's almost like you've got the thorough education of the capital structure formation of corporations and assets and everything you did from the top down versus what I would say maybe I had sort of a bottom up with a lot of my venture capital experience in private companies with liquidation preferences and things of that nature. You had started with, companies that were already established and knew it up and down the ladder in terms of where the investors stood. Did you do that? Was that self-taught? Were you working for a firm when you were doing that, or was that your own deal?
Some of both. I came to be retained by banks, by investment banks, in particular Goldman Sachs. I did it on behalf of various groups. As I developed more prowess, I had much more business than I could possibly do myself.
Let's switch gears a little bit. Do you have a recollection of one or two of your biggest winners, and how big were they in the resource sector? People talk about 3 baggers, 5 baggers, 20 baggers, 100 baggers. What's the big one that you had, or two?
I got bragging rights here. I went to work, as I say, as a retail broker in late 1987, and I worked for other people for about 3 years. And I came to learn that I needed my own broker-dealer because I needed to protect my clients from the greed and larceny of brokerage firms. And so I formed my own firm, Global Resource Investments, in 1990. I had the good fortune then to already be connected with people who either were or became really, truly the big guns of the natural resource business. My earliest strategic ally, if that's the right phrase, was, of course, Adolf Lundin. And if you are working with Lundin, what it means was, even when I started out, I got to start at the top, at the very, 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 very top. So one example would be in 1982, helping with the distribution of a little tiny Toronto-based company called Franco-Nevada at 30 cents a share. It's now, not surprisingly, called Franco-Nevada. That was an absolutely insane success, and one that I deserve no credit for, but I was a beneficiary of. But in terms of bragging rights and educational rights, easily the best story was Paladin Uranium. Because I became a concerted contrarian, didn't look for stuff that was hot. I looked for stuff that was out of favor. And by 1998, I determined that the biggest opportunity, perhaps of my career, which it ended up being, was in the uranium business. Uranium had been in a 20-year bear market. They were selling the stuff for $8 a pound. Fully loaded, the production cost was $25 or $30 a pound. So the industry was in liquidation, but it still provided 25% of the base load power in the United States. The value proposition was that either the price would go up or the lights would go out. But people weren't just bored of uranium. When people heard about uranium, they thought about these ugly 3 Mile Island, Nagasaki, that kind of thing. Deeply hated. So I began to look for small uranium companies. And I happened at a conference in Western Australia called Diggers and Dealers to meet a wonderful genius by the name of John Borshoff in 1999. And he had a little penny dreadful called Paladin Uranium. And I remember thinking he had a market capitalization of $1.8 million Australian. And I said to him, John, with $1.8 million market capitalization, how can you possibly conduct exploration while paying for G&A? And he looked at me with a perfectly straight face. He started laughing. He says, I don't need to explore. And I thought, oh, God, another junior mining liar. He said, let me explain to you. I was worldwide exploration manager for Uranus. And I spent, on behalf of the West German government and investors, $1 billion looking for uranium in the 60s and 70s. When they shut down the program, as part of my severance, they gave me the database. So I have a database that represents $1 billion in exploration expenditures. And when I say I don't have to explore, I don't have to explore. I have to look in my file at discoveries that were made and stake them.
Beauty.
I never heard a story I liked that much. So I had him take me through the file and show me 10 different places, actually 15 different places, where he could acquire by staking literally millions of pounds of uranium. Uranium that would make no money at $8 or $10, but could make substantial money at $30. I got incredibly excited. I raised $2 million for him, which is to say more than his market cap, a substantial part of it my own, and told him to stake as many high-quality pounds, irrespective of locale. So we were in Malawi, Botswana, also Australia, as he could. And here's the interesting part about that, Eric, or one interesting part. I was rewarded for this genius. As I recall, I did the financing at 10 cents with a 15-cent warrant. I was rewarded by for my genius by seeing the stock go from 10 cents to 12.5 cents, which felt good. Then 11, 10, 9, 8, 7. The stock ultimately fell to a penny.
Wow.
If you have a big position at 10 cents and the stock falls to a penny, you don't have a hold. You have a buy or you have a sell. So I revisited all of my premise, all of my intellectual premise, and I decided that I was right and the market was wrong. And while I didn't buy any at a penny, I bought a fair bit at a penny and a half. This is important because if you're sure and the share price falls, you're in a wonderful position if you have any courage. Suffice it to say, I had been early with uranium, but not wrong. And within 6 years of me buying stock at a penny and a half, the stock was $10 bid.
Wow.
So if you ignore the penny and a half part and you just view my entrance at 10 cents, 10 cents to $10 is easily the best win that I have ever enjoyed. Now, that did really three things for me. First of all, it made me personally an insane amount of money. The second thing it did is that the investors who were smart enough to join me in that journey, who were my best investors, I went from being a very bright guy to being a life-changing legend. The third thing it did is to inculcate in me the sense that I have to love hate. I have to go to places that are so unpopular that people question my sanity.
Yep.
Because the easy money is made on the transition from hated to tolerated. The
Right.
big money, perhaps, is the transition from tolerated to loved. But the easy money is made in the transition from hated to not hated or tolerated. And that has served me extraordinarily well in the last 30 years.
How important is the promotion or marketing side of the business? Because you talked about Murray Pezim, who, he was a bit before my time, but the name rings on with Hemlo. And, some still call him the greatest, promoter that had ever been around in the resource space. And you also mentioned Doug Casey, with the newsletter, which is a bit different, but he was able, with 60,000 investors, to recommend a stock. And probably, just like with the gold investment letter, and even more so with Doug, you could end up putting a small deal on people's radar that can really move these companies. So any thoughts on that side of it? Do you think it's necessary to make sure that some of these companies have strong marketing and or promoters or promotions behind them to make those big wins?
I think it's the third most important part, or fourth most important part of the equation. The most important part of the equation is extraordinarily high quality people. In any part of venture capital, the ego driver, if you will, the CEO or the person behind the throne, has to be a very high quality person. He or she has to have been previously successful and have a reputation, and that success has to be directly related to the task at hand. The second most important component for me is that the task at hand should be out of favor. If lithium is really hot, being the 300th person into the lithium game is a recipe for disaster. So the high-quality person has to be somebody doing something that they have familiarity with, where they have very little competition. The third part of the equation is scale. If you're going to take the risks involved in building a small company, the rewards have to be commensurate with the risk. I have zero interest in a small, high-grade mine where the promoter says we're going to use the cash flow from this operation to grow without dilution. I'm taking a lot of risk, and I want to take risk with the understanding that I'll make a mistake more times than not. But if I succeed, where my successes will amortize other failures. The fourth criterion is the cost of capital, which is to say, promotion. You can have the Murray Pezims of the world who really structured their financings, who put together deals with a yellow legal pad, passing out the seed stock as an example, to people who would become useful in the acquisition strategies later, people who understood the interplay between institutional investors, brokerage firms, salesmen, research, and then large-scale retail participation. Or you could find the logical conclusion to Murray Pezim, which is to say these real structural geniuses, market structural geniuses, like Frank Giustra. Or you could find either centers of influence, my old partner Eric Sprott being one, people who had such, first of all, extraordinary analytical abilities, but also had the ability to convey a wonderful story that they understood in a way that thousands of other people understood. So I learned a lot about promotion from the view of building a loyal constituency and lowering the cost of capital. But I would suggest that that's the fourth most important attribute that I look at in an investment.
Today, what's so odd, I guess, is that it's very hard to find U.S.-based, certainly even institutions, but brokers or even retail investors that are involved in the mining space. And the other part is the Canadians, where this is normal talk at the dinner table, mining penny stock versus talking about Starbucks to teach your kids about what is an equity investment. A lot of the people that have made huge marks in this business, including the geologists, are getting up there in age, and we seem to have a shortage in the pipeline there. So maybe two separate questions, but do you think that the U.S. market will ever adopt more allocation to this general mining equity space? And how big is the problem going to be for the sector in, call it, 20 years, when most of the people that have been doing what they do are gone and there's not enough younger people coming up and that are driven to be in this industry?
I think the market will take care of the latter question. I think there's a huge opportunity now for younger people to involve themselves in the space, and they need to involve themselves in the United States. It is easier to break in Canada, but it's tougher to make money in Canada. The Canadian savings and investment market is about 7% the size of the U.S. savings and investment market. And Canada is overserved in terms of natural resources financial services. The United States market is more than 12 times the size of the Canadian market, and it's underserved. So this is simple arithmetic. If you're looking for a career in natural resource financial services, starting off in Vancouver or Calgary or Toronto is idiotic. You need to involve yourself in the United States. There are, as far as I'm aware, only 4 participants in the U.S. market. The largest is my former firm, Sprott Global, owned by Sprott. The second largest is probably an add-on, which is to say those few Canaccord brokers who are licensed in the U.S. who care about resources as opposed to technology. The third is probably those brokers at Haywood who are licensed in the U.S. The fourth has a potential to be a superstar. It is Raymond James, who operate on both sides of the border, but don't yet understand the franchise that they have with Canadian expertise and a U.S. client base.
Ray J, interested. They were not on my radar for this. That's very interesting. I'm going to look into that. When did uranium, did you start to go in again heavily, and where are we today in that cycle?
So I re-entered the uranium trade in 2016.
Okay.
Early. The uranium stocks ran, the whole sector ran in 2020, 2021. The stocks got way ahead of themselves, concurrently with Sprott, with a lot of prodding from me, starting the Sprott Physical Uranium Trust. And the consequence of that is that while I kept my holdings in physical uranium, I sold most of my uranium stocks in 2021 because I saw them getting substantially ahead of themselves. Beginning in 2022, those stocks fell by 50, 60, 70%. And they became cheap enough again. So I began towards the end of 2022 to be a substantial buyer of uranium stocks. Now, in early 2024, in terms of the junior uranium stocks, they're no longer hated. So the easy money has been made. And I have sold enough of my uranium portfolio that I've recouped all of my invested capital. Plus, I've sold enough to pay the capital gains on the recoupment of capital. I would suggest to you, Eric, that the easy money has been made, but for reasons that would take us 20 minutes to discuss, it's likely that the market continues for the next 5 years. I suspect that both the uranium price itself and the price of the uranium equities needs to take a rest. Yep. So I would suspect a hiatus, but I suspect that we aren't close to a blow-off top, And I suspect, too, that given the fact that uranium now will trade primarily in the term market, which will add visibility both to companies and investors in terms of the top-line revenues, that there is a substantial amount of money to be made over the next 5 years by high-quality stock pickers. Don't buy the sector, buy individual companies where their cash flow as a consequence of pounds sold into the term market and their financing terms means that you are buying, $1 billion in net present value for $600 million, parenthetically, in the market.
Yep. We've been in a bear cycle for almost 3.5 years, generally since the tops, I believe, in August of 2020. How bad is, or how good, depending on how you're looking at it, is this current market environment from what you've seen in the past? And how confident are you, if you are at all, that things may turn into a bullish environment, or at least a tolerant environment sometime soon?
I believe that the bear market for juniors ended in 2022. The market bifurcated, as it should, between high-quality juniors and flotsam and jetsam. It's important to note, Eric, that probably only 10 or 15% of the juniors are ever viable, which is to say 85% of them are lifestyle exercises or mistakes, flotsam and jetsam. I sincerely hope that 80% of the listings on the exchange die a merciful death. I don't think they will. But I would argue that the higher quality juniors bottomed in the year 2022. I participated in, if my memory serves me well, 13 private placements in 2023. And in 11 of 13 private placements, I was cut back, which is to say I didn't get a full allocation, which tells me among the higher quality juniors that there was plenty of capital available. I think now in 2024 and 2025, unfortunately from my point of view, that the money is going to come down the quality trail. I think you're going to see 4-cent stocks that are, stocks that are now 4 cents that are 30 cents 2 years from now.
Yep.
I was just at the Vancouver Resources Investment Conference. There were 240 issuers present as exhibitors. Probably 12 of those were viable, but they were very, very viable. And unusually, in a market that has opportunity, there were a lot of reasonably informed, reasonably liquid investors. I've seen a couple times before in my life where opportunity met capital, and I think we're right there right now.
Okay.
This isn't a place for the faint at heart. This isn't a place for dumb money. This is not a place where got a hunch, bet a bunch works. But this is a place where you apply the old John Kaiser bottom fishing technique, and you look for high-quality people around names that have failed, that they haven't gotten around to recycling yet, and you place your bets with a longer time horizon. This is probably the best market in 12 years for 10-baggers.
What would you say in general for a metal in any segment, whether it be a critical metal, a base metal, a precious metal? Where do you think the biggest opportunities, or one or two, are? Which space? Because we saw, like you said, with lithium, it got very, very crowded, and that story to me is, a little played out. I'm looking for the next lithium, type of situation. What do you like right now in terms of the metals the best?
The most available for most investors is gold.
Yes.
For once in my career, gold opportunities are appropriately priced. They aren't cheap, but they're fairly priced. And this is the first time in 45 years that gold opportunities have been fairly priced. Gold is not necessarily a contrarian activity, but that notwithstanding, they're appropriately priced. The silver equities are hated.
Yes.
Because silver failed in that sort of Reddit silver rally. In my experience, gold has to move before silver does. So my suspicion is that the silver stocks move in 2025 as opposed to 2024. Mm-hmm. But they'll move further and faster when they move. For myself, I need to move beyond that. I have very full allocations, particularly in the gold side, and I'm filling out my allocations in the silver side, knowing that I'm early. As an investor, not a speculator, I'm in coal, which is hated and cheap, and I'm in oil and gas, which is not quite as hated and not quite as cheap, but is still stupidly attractive. As a speculator looking forward, I look for metals that have disappointed. Nickel is off by 50%.
Yep.
It's off because there's a bunch of supply from lateritic nickels. That supply will begin to level out in a year and a half. It's also down in price because the Russians have been selling everything that they can sell to raise cash, including nickel. I'm attracted to platinum for the same reason. Platinum and palladium prices are off like a boulder off a bridge. The narrative now is that the use of platinum in internal combustion engines is going to go away because nobody's going to buy a gasoline-burning car. What horseshit. They're also off because, again, Russian dishoarding. So what is hated? Platinum and palladium are hated.
Yes, absolutely.
Nickel is hated.
Yes.
I look for companies where the production cost of the metal is higher than the selling price of the commodity. And in sulfide nickel, that's the case. In platinum and palladium, that's the case. The caveat, in the platinum and palladium, I would prefer that the assets, well, first of all, I can't buy them in Russia right now as an American, but I'm afraid of South Africa in particular. So I'm looking for platinum and palladium assets, world-class assets that are in different political jurisdictions. Thus far, the only place that I've found that has the combination of scalable assets has been in Brazil, where I've participated in 2 large-scale platinum exploration projects.
We have a commonality, I think, if you still are bullish, in a very unique small market metal called vanadium.
Yeah.
Are you bullish on vanadium, and what do you think about that space?
I am bullish on vanadium. It's very tough to play.
Yes.
For me to participate in a vanadium stock, first of all, the in situ reserve and resources, at least by way of target, has to exceed $2.5 billion US. I don't have any interest in a small deposit, irrespective of grade. And I have to believe that the deposit will be in the best cash cost quartile with the highest return on capital employed quartile, which is to say return on capital employed exceeding 25%, and AISC in the best quartile. I understand that with vanadium, it would be easy for the price to run by 100%. Its use as an alloy and its use in vanadium redox batteries means that it will continue to be consumed and the consumption will increase in the 5 to 10 year time frame. I'm also, however, aware that the Platte Reef in South Africa is the largest vanadium dump in the world. And if the vanadium price gets too high, that South African production will come on and will swamp everything. So I'm not an optionality player in vanadium. I'm not looking for a deposit that doesn't make sense here, but will make sense at 3 times the price. Right. I'm looking for somebody who will make a lot of money in the interim with a doubling in the price. That's where I am with the metal.
Fantastic. Well, Rick, I could talk to you for hours, but I really appreciate the time you took with us today on Real Vision. It's been a pleasure getting to know you a little bit and hear your perspective and your story.
I should say before we sign off that anybody listening to this who likes what I have to say about natural resources can learn more. Go to my website, ruleinvestmentmedia.com. List your natural resource portfolio there. I personally will rank that portfolio. No obligation, no cost. I'll rank them 1 to 10, 1 best, 10 worst. Rule Investment Media, list your natural resource stocks. No crypto, no tech stocks, no pot stocks, just natural resource stocks.
Awesome. I'm going to do it next week, and I'm going to call you about Battle Bank as well.
I look forward to that. Thank you for the opportunity.
Thank you, Rick. As an individual investor in the natural resources space, he's really legendary in terms of those of us that are in this unique area. And there aren't very many investors that are serious about the space that haven't heard his name before. The interview itself was fascinating in that, but what we started with is Rick's story. And it's a fantastic story. And not a lot of people know about where he came from and how he came up. And so we dove into that, and I was fascinated by some of the details myself that I didn't know and am going to go look into after this interview because it was very educational.